I am Kim Harris. I am the treasurer, and I'd like to start out our meeting by saying that this board supports a land acknowledgement and an anti-racism statement that can be found on our website. Roll call tonight. We have present Richard Walke, Jean Meixner, Jacob Galfano, and Sonia is on her way. Staff members are Dan Pike. I think he dropped off, but will be back. And Accounting Director of Finance, Joel Heverling. And hopefully Dan will be back with us. Excused absences for this evening are Jessica Staten, and I am missing Callie Cass. So I have not heard from her, but hopefully she will be able to log on as well. So at this point, I would like to call for an adoption of the agenda.
Being recorded.
And if anyone would like to make a motion for that.
A motion to accept it.
Second.
Okay. It was a motion by Richard and seconded by Jean. Also, if everyone has had an opportunity to look over and review our minutes from the April 27th meeting, Jessica had a few updates, she caught some good things on there. And if everyone has looked those over, I would like a motion to approve the minutes from our last meeting, April 27th.
A motion to approve.
Seconded.
Second, okay, great, thank you. Approved, motioned by Richard and seconded by Jacob. We added an announcement portion to the agenda. So are there any announcements from any of the committee members or staff? Okay. Hearing none. We have no continuing business and no new business. So that brings us to our financial statements for March of 2022. And I am going to hand over the meeting to Joel to screen share so that we can review the March financial statements.
Okay, I'll just screen share this real quick. Take it everyone can see the balance sheet. Okay, that's good. Well, the good thing is this should go pretty quick. There's nothing really too earth-shattering or exciting about March. So what I'm presenting is obviously the March 31, 2022 year-ending financial statements, meaning the first quarter basically of 2022. And now the balance sheet, of course, I've gone over this the last several meetings, doing December, January, February. So the classifications, especially January and February, the big difference would be this Reserve Cap Reserve Holding Cash Fund right here, where basically the line right above this highlighted blue line, the Cap Reserve Holding Cash Fund, this is where you'll see this dropping to zero. And then you'll see that this line item, the highlighted line item, is now picking up 1.166 million. So basically the money's been transferred out of this Cap Reserve Holding Cash Fund into a Reserve Capital Reserve Holding Cash Fund. And I'll show you on the cash statement, the reserve cash statement, again, how that works there as well.
Joel, that's the transfer fee?
Yes, the transfer fee. So that was the 1/4 of 1% that we charged to the buyer of the real property sold out here. And that's what's going to be, so the board voted on this last month in terms of selecting a third-party servicer who will be basically handling this transfer fee refund as well to the community. So once that is up and running, then we'll also make more announcements. We'll put something in the views too, like showing people. There's going to be a website as well. So it's like there'll be a website that people can go right to submit their closing document and basically fill out like an online form. It could be done by mail too, I suppose, if someone wanted to do that. But we'll make a further announcement in the future when this is all set up and running as well. But the company right now is they're working on it as we speak, basically. So we actually talked to them today as well in a conference call. So it's moving forward.
Hey, Joel,
Sure. Yes.
sorry to interrupt. I was curious about prepaid golf memberships. Why would we have incur liability? There's nothing there, no entry, but why would we incur liability? Would that be a membership held over from last year or something?
Yeah, basically what happens with this, with golf, is Brian will start accepting payments from people always in October, November, December for the next year. So like October, November, December of 2021, basically he accepted about that, 26,269. And then this zeroes out because the way that we do it with golf is, a little unorthodox, but it's just the way that they've always been doing it. So I've just kept it since, in terms of the whole audit year, it doesn't make a difference. But basically on January 1, we'll just recognize this whole thing as revenue in the golf financial statements. And of course, when the auditors get the statements at the end of the year, they don't care when it's recognized because it all pertains to that year anyways. So when they audit the 2021 financial statements, or next year when they audit the 2022 financial statements, this 26,269, whether we recognize that in January or recognize it 1/12 every single month until the end of 2022 in this case, it would still be 26,269 total for the year. So that's why you see, to make a long story short, this is the golf revenue that he took in October, November, December of 2021 that pertained to this year, 2022.
Okay. Yeah, that's kind of what I didn't have the time frames just right, but the concept is what I kind of figured. Okay, thank you.
Sure, yeah. And the other course material loan, well, really the only real loan is the SURF loan right here, the 1,083,000. You'll see it, we would expect to see this go down from month to month to month as we make payments on it, which obviously it does, since the principal payments start to hack away at this outstanding principal or liability balance right here. Now, okay, so turning to the next page, the income statement, which is probably the most interesting page, I would say, out of all the financial statements. I'll just start off with the collection rate. So the collection rate, now keep in mind, we budgeted for a 93% collection rate for 2022. And we're through the end of March, we're clocking in at a 95.7% collection rate. So obviously anything above what we budgeted for is good. So for every 1% that we take in, like for example, let's just say at the end of the year, we got a 94% collection rate instead of 93%. So what that means is then we took in, or we got an additional approximately 22,000 more for operations because of that. So if our collection rate was 95% at the end of the year, then we took in, approximately another $44,000 that would go to operational
Joel,
income.
each percent is 22, each percent over that is 22,000 and it goes
That's right.
to operations automatically.
Yes. So then it automatically, basically what's going to happen is the bad debt expense is going to be lower. And so you're going to have more operational income and, obviously more cash to work with for operations. But so for people probably wondering, if you budget for 93%, we got a 95%, what does that really mean? Well, it means operations gets another approximately 44,000 more than what we counted on in a good way. And you could say the same thing in reverse too. So we came in at a 92% collection rate. Well, then we just lost $22,000 of operational income that we budgeted for that we didn't get as well. And I have calculated the number for April as well. And so April is, so we're still year to date, still hanging in there at 95.7% now in terms of like relative terms. So you know how this pertains to like a past year. So, okay, so 95.7% at the end of March, 2022. And so last year at the end of March, 2021, we were at 91%. And we still finished out the year at the end of, to move this window here. So we still finished out the year at 96.8% at the end of 2021. So even though at the end, and this is typically how it goes for our collection rate here at Sudden Valley. So we usually start out the year at the lowest point. January seems to always be the worst month. And then we steadily build up from there until the end of the year. So for us to be at 95.7% right now in March that's very encouraging. That's a good sign. And in terms of for April, so we're still hanging in there at 95.7% for April. For April of 2021, year to date, we're at 91.6%. So from March March, we're at 91% 2021. April 2021, we edged up to 91.6%. But then we still finished out 2021 at 96.8%. So at the end of March and at the end of April, we're already higher than where we were back in March of 2021 and April 2021. So that's an encouraging sign.
Joel, does that overage just hang out in the operating reserves, or where does that go?
Yeah, so the overage, how it would basically work, let's just say, to keep this real simple, let's say we were at $22,000 over budget at the end of 2021. And then this is before I calculated in the 94% collection rate. I was still clocking us in at 93%. And then this was like $22,000 over budget. Well, as soon as that extra 1% hit, then we would have no over budget. We would be at zero. We would have a balanced budget at the end of the year. So it directly goes to help out this bottom line right here. So this number benefits from about 22,000 for every percent over our budgeted collection rate. Like in a perfect world, the way that we budget this, so when we budget at 93%, so that means we're also budgeting our expenses to come in, according to a 93% collection rate. So in a perfect world, we would have a net income of nothing at the end of the year. We would just come in just flat. But then if we had a 94% in that case, and we kept our expenses just perfectly according to budget, which is really difficult to do one way or the other, but then we would have net income of 22,000 at that case. Or if we had a 95%, net income would be 44,000 at that point.
Okay, thank you.
Sure, yeah. Now since I was talking about net income, might as well just focus on. So these first two columns is just your current month, March 2022. So you're only looking at the month. And then probably the more interesting is these columns over here, which is our year-to-date numbers. So just in terms of last year, we had $17,120 net income. This year we have $86,237 in net income. So last year we were over budget by about $47,584 for the month. This year we're over budget by about, real close to $41,000 for the month. It's really more meaningful, especially as we start moving on in the year, to look at the year-to-date numbers. So we have $172,054 net income at the end of year-to-date March 2022. Last year, year-to-date March 2021, we had $131,310. Now, here's the thing where it gets kind of a little tricky, but last year we were over a budget by about $9,357 at the end of March 2021 year-to-date. And you'll notice we're over a budget by $37,484 year-to-date. And then, you probably might wonder, well, geez, what could do something like that? Basically, when you talk about the budgeted or how we are to budget over or under, it really is a function of how much we fine tune, how much in terms of the budget amount coming in through the year. So like, for example, Marina is a good example right here, where we have last year. So last year we had $20,885 in income in Marina at the end of March 2021. And then this year we had, and this, quite frankly, just a function of when we start doing the billings for Marina. So like when actually Gil gets the billings from Marina, when he starts putting them into the accounts receivable system to put it on the homeowner's accounts or whoever has a Marina account. But then last year we also had, but the thing is, when we bill people, then they also have time to pay this. So, you know, very rarely they're just not going to pay the whole thing right there on the spot. We'll send out billings for it. Then over like the preceding months, or I mean the following months, then as the billings start coming in, then it'll basically back off bad debt expense. So like, for example, let's just say, here's a perfect example to where at the end of March, we have about 75,000 that we recorded in revenue. But then right away, since we're very conservative with the bad debt expense. So at the end of the month, if something isn't paid, then in the bad debt entry, I'll just expense it immediately to bad debt expense. And so that's why you see this offset right here, immediately wiping it away in a sense. And then in the following months, as they pay this, let's just say at the end of April, they paid the whole thing, or people paid all the money owed, then this 75,729 would then just zero right out. And then, but this negative 75,729, as you can see, becomes a component of this down here. So if, so in the following month and nothing else changed, but then people paid their Marina billings, then this would become zero. And then this would immediately, then you'd have like a $35,000 like surplus in a sense to
So,
budget.
Joel, to be clear, that they're billed and then you immediately make it a debt, or I'm not clear on how that line item is there for the Marina.
Yeah, it's not really, well, it's a debt to the Marina people, like this, whoever has a slip or whatever.
Right.
To us, it's kind of like with dues. This is a perfect example of the dues right here. If someone doesn't, if people don't, whoever has outstanding dues, that is, you know, like for example, well, this is March right here. And then let's just say all we did was we just billed the March dues and then that was it.
Yeah.
And then so then like I'm going to be calculating the bad debt expense in April, following month. And then I'll look back and see who didn't pay their dues in March. And then at that point, I just automatically expense it, do a bad debt expense, and not write it off, but reserve it to a bad debt reserve account. It's on the balance sheet. But basically the bottom line is I act as though like, oh, we're not going to get this, it's gone. So so I'm basically, you could kind of think about it like reversing income, so to speak. But it's really a bad debt expense.
The 74,000 is what the Marina slip people over for that month, for March only,
Yeah.
not for the year.
Year to date, yes, year to date.
Oh, year to date. Okay.
Yeah.
Thank you.
So
like-
how long do people take to pay this? I mean, so is this an ongoing negative, or at some point does it get caught up?
Well, actually, I'll tell you real quick here. I'm going to, on my end, I'm going to pull up the April, and I can see real quick here. And this will give you a really good idea. So the bad debt expense at the end of April, so it has now gone from negative 75,000, or just the bad debt expense has gone from being 75,729 and has dropped down now to 14,946. And that's because of people paying their accounts. And then, so then when I do the bad debt expense now, like in May, and I do it for April, then it's basically reversing those back off again. But it becomes something that does affect like the operations better, worse, basically, when you're comparing something to budget.
Mhm.
I think for me, that's the thing that jumps out the most on the income sheet. So I think, and I don't want to speak for the committee, but I know with that number being so big, it just jumps out. So that, you know, makes you have questions about why it is.
Well, I think the thing that's interesting, so March you have, just for the month of March, it looks like it's a negative 76, but then you've got year to date as a negative 75. So I don't understand exactly how that all translates. So I guess most of it got paid
Well, this right here is comparing the entire marina type revenues. And so meaning, so there are more than one, there are like a multiple line items that get into this.
Right,
But
but I'm saying so the columns before that, when you have current month March, you've got you've got a negative 76. So that means that there's still 76 outstanding for the month of March. Then you got year to date, which is now, this is accumulation of several months. That's 75. It's just confusing to understand how that all works together.
Oh, sure, yeah. And it's also, yeah, by the virtue of like the multiple types of line items that work together with this. Some, they won't match up like picture perfectly, but they'll be fairly close. And I should also point out that 74,967 is already been, so like that revenue amount includes the bad debt expense in that revenue amount. So it's been decreased because of that bad debt.
So it's really closer to
So
150.
Joe,
Matter of fact, I should just,
yeah, so one of the things that's going on with the marina income is that the marina extended the renewal period a little later. They just closed that at May 15th, so a lot of that money's still coming in, right? So this is March. This is from
oh, yes, yeah.
this is the March income statement. So, you know, again, they were still taking money in. So this budget line item had to do with the marina income, but it should catch up with what, because it's seasonal income basically anyway. So it should catch up, correct?
Oh, yes, yes. And like, for example, at the end of April, so like, for example, you see this bad debt, here's the bad debt expense right here for marina. This is for March, 61,200. So at the end of April, that has already decreased to 14,946. And that's because of the money coming through, like members paying their marina accounts.
And so this is the detailed income for marina, but
The
on the
detailed
other
income
sheet,
total.
you had it aggregated, which is why the numbers didn't match for the debt and the end of month income. I think I'm understanding.
So there, like, for example, like that would match right up to the income statement, which it does, 74,967. And then there's the variance, 75,729. But the 74,967, you can see already includes its net of that bad debt expense for marina. But it's marina is the one that kind of at the beginning of the year kind of tends to throw things off a little. It can be a little confusing because of like, you know, once we get the billings into the system, then we record it as revenue. Now at that point, the members, you know, of course, they're not expected to pay it immediately on the spot. So they're sent billings for the marina. And then as they send their payments in, then the bad debt expense just naturally reverses off and reverses off fairly quickly. Because like I said, in April, it's already reduced down to approximately 15,000 from 61,000. And then May, the same thing, like any sort of straggler payments, you know, start to come in and reduce it even more. But basically pointing out this line item, sometimes it's like pointing out certain line items, and I kind of hopefully it didn't confuse when I pointed it out, but I just wanted to point out that it's the fact that we're recording the revenue, and if it wasn't paid immediately, like it won't be this early in the year especially for marina, but then it immediately gets grabbed, you know, as a bad debt expense to basically, and you could kind of think about it loosely like writing off the revenue in a sense, but then as it's paid in successive months, then it reverses out.
Okay, that's clear, Joel. Thank you.
Sure, yeah. Now, one way to kind of look at it, especially kind of, you know, when you start to have like, like the net income has 37,484. It looks like, you know, like it looks like we're under budget net income wise, but it can be affected by line items, especially like this with marina. But that's why, like a lot of times, I also like to compute an expense to revenue ratio, which is all it is just taking the total expenses and dividing it by the total revenues right here. And it's just giving you just a ratio of how much of your expenses, compared to revenues. So in this case, and this, for this sort of ratio, obviously a lower number is better, but so March of 2022 is 83.3%, which just basically means for every dollar of revenue that you took in, you had 83.3 cents of expenses to match it up with. And then, so then last year at this point, we had the ratio is 86.1%. So last year at this time, for every dollar of revenues that we took in, we had 86 cents worth of expenses to go against it. Now this year we had
But this-
83 cents to go
Sorry.
against it.
I don't have a way to hold my hand up. I apologize. I thought you were done. I apologize. Sorry. You can finish your sentence.
Oh.
I had a question.
The
when
preceding
you're
month,
ready.
February, it was real close to 87%. So at least we're moving, for now in the right direction in terms of that sort of a ratio. That's basically it for the income statement. Sonia, if you had a question.
Yeah, I do. On the rec center, you're showing the lease income. It appears that lease income is CTK. Is that correct? And it's showing that there is no payment.
On the rec center,
Yep.
Is
What-
that rec center and pools income?
what page are you on?
No, go back up. You passed it when you're showing income, and it's showing lease income, and it's showing under the rec, dance barn, whatever, lease income. There's no lease income. Where's the revenue from CTK?
Now, this line item is going to be made up of a couple things. Would be like, for example, CTK is one that you pointed out. Another one would technically be El Agave as well. Obviously
Not under here.
there are issues. Well, it would be
Agave
under,
wouldn't be under.
it would be under the lease income line item.
It would still be under here.
Yeah.
Okay.
Oh, that's all agave. Okay.
But we're missing all of the lease income.
And well, I mean, of course, as you know, there's a current situation with the El Agave type, with that situation in terms of, billing them and whatnot. That's still being ironed
Right.
out.
But
And the CTK, of course, is
you
less-
understand what my question is.
Yeah, sure. And this, in terms of like for a CTK thing, for it not to show up in there is just basically, see, sometimes like, for example, like Davey will do the journal entries on these, and especially for like lower dollar amounts, she might catch them in a couple of months at a time.
What is CTK? Sorry, I'm not
Christ the
aware.
King.
of it.
Oh, Christ,
What
the
is-
King, the church that rents the barn.
Oh, okay.
Yeah.
All right. Thank you.
So you're saying they don't pay month to month? Sometimes they'll pay in over a couple of months?
Sometimes sometimes we might get payments for like 2 months at a time or 3 months at a time or 1 month at a time. I think for the most part, though, they're usually really good in terms of, doing the payments, but whether they made the payment or not, also like when Davey does these entries, she's AP payroll, but when she does these entries, especially depending on when it is at the time of the year, but for immaterial type dollar amount entries, she can do a couple months at a time.
Mhm.
Now this sheet right here, the cash, and I would say this really is a handy spreadsheet, or this sheet right here, but this reserve cash balance sheet, it's showing you all your major accounts like surf roads, the ones that really make up the dues amount, surf roads, mailboxes, showing you the dues coming in, and this is also tied to cash, meaning so it's not just this is how much we build, but it's also a matter in terms of like how much cash that we have pulling in. So how much, like, so when people make their payments, this is literally, because this is a cash, like a balance sheet. So it's, or not a balance sheet, but it's a cash, reserve cash balance and activity sheet is what it's called. But basically this is showing you the cash actually coming in the door and leaving, in a sense, the association. So it's just made up of the dues coming in, the, interest income here, expenditures, which makes up, when I say expenditures, this means checks that we're writing for capital projects and or surf loan payments, stuff like that. Basically, the checks that we write, the money that goes out the door, and then net available cash balance of 3/31/2022. This will tie right back to the balance sheet. So 3,058,577 for surf. If I run right back to the balance sheet, I'd see that amount right here for surf. And then down below is basically these are the projected amounts. So like, here's our 93% dues collections rate coming in. Those are the big line items. The surf loan payments that we're going to make. So at this point, 9 months worth of surf loan payments left to make for the year. This is the biggest line item. In fact, I'll just pull open. Now, this is one of the addendums, like on the website, addendum 3, I believe. So like every quarter, we'll provide the capital project report, which is basically, can you see this capital project report? Okay, so.
Thank you. I was actually hoping we'd go through something like this. So that's
yeah.
great. Thanks.
Yeah. And this is a handy report too, because you'll see that, like, for example, what is showing up on here is all the projects that the board has approved. So approved through March. You will see, and I could have taken these off, but I just let them on in case people wanted to see it. But these are the closed projects. And as you notice, it's not factoring into the obligated amount since we're closing them out. But anything that's marked as open. So like, let's look at the golf course bridge right here. So the board approved that back in February, exactly on February 10th is when they voted on that. And board approved amount 323,177. That's the total amount that we've paid so far on that. And then the difference, you see, we're just calling that obligated. We're just, as far as we're concerned, we're going to have to spend all that since we committed to it. And then it all adds up and surf to be, this is how much we have obligated for surf, how much that, that we've committed ourselves to paying. So we have about 631,870. Then I'll just put this over here for a second. There's that 631,870 on this cash sheet. And then that's giving you, I'll pull this back over here in a second, but then that's giving you the net usable cash. So basically, this is what we're projecting at the end of the year. So far, we'll have about 3,229,000 in surf. But then we have this board recommended carryover balance, 600,000, which is just saying this is how much we should just kind of keep on hand. So this is the usable amount right here, $2,629,016. The roads is the same thing. There's that 680,060. Let me pull this back over. So then this first page is the surf stuff. Second page is here, all the roads projects. That total, that 680,060 down here. You'll see the things that are open, the things that are closed. But this is everything through March of 2022. Everything that the board has approved, officially approved, and we're paying on, like paying invoices when they show up for these projects. The third page is, this is UDR stuff. So, and it's the same drill with UDR. Anything that the board has approved to be spent out of UDR. And even though we do still have some old line items hanging out here, like hazardous tree removal right here, approved back in 2019. It's still left on here because the board did approve it, meaning so it's like the association could make expenditures against this sort of activity, and they still have 8,202 left over that they could still draw down UDR funds for it. And that's where that 53,859 shows up there, and then you'll see it here on the UDR column. There's a 53,859 here. So that's the total obligated expenses or that for each one of those major funds. You won't see anything for mailbox yet, since there are no approved projects for mailbox yet. The big difference here with now here's this capital reserve holding account. So you'll see that's what we started the year with, this 1,157,885. We still have some, basically this is money. So these were property sales that happened by the end of 2021, but it's just taken some time for it to come to us from title companies And that's what's showing up here. And then you'll see this whole amount right here is basically transferred away and put into this SURF capital reserve holding cash column. And then down here, you'll see obligated expenses / holdings. This is where I'm basically saying, I'm basically taking this away. Basically, we're just acting as though it'll all be refunded. So it's like people will apply for these refunds. So we can't count on this cash at the end of the day. So that's why you see this now having a zero balance. This is the biggest change on this whole cash sheet, would be these two columns right here. If you looked at 2021, you'd only see this column, but now you'll see this column where this is now kind of being transferred into and zeroing itself out. Let's see now now the following two pages.
I'm sorry to
Rick,
interrupt.
yeah,
May
go
I
ahead.
ask a question, please?
Sure.
What is on the column they're heading, board density reduction? What does that reflect?
So basically, these are funds that that the board could use for, like purchasing more green space, for example. So like basically when the board, I believe that, going back in time when they sold lots, then the amount was put into this board density reduction fund.
Mhm.
So it could also be used in the future for, if they wanted to say like acquire a property and then immediately just green space it, we take it out of here.
It's almost like a slush fund then.
Yeah, kind of like that. Yeah.
Okay, thank you. Multi-purpose fund to be probably more technical.
Yeah.
Thanks
Thank
for asking that, Richard, because I think we assume that everybody knows what all of these accounts are for, and
Yeah.
good for us to ask. And Joel, is that a new mitigation assignment of savings? Is that a new column?
No, that column has always been there. And this is just, this is when we have to do like an assignment of savings account on projects like Area Z and things like that.
Mhm.
You'll see there was, for like Area Z, the bank, or we got a letter from the county to release a good sizable amount of this, that's why it's been subtracted out of here, and then it's been transferred back over to SURF, which is where it came from in the first place.
Mhm.
But these are all monies that basically, as long as we uphold our end of the bargain and don't do anything to where we have to mitigate for construction purposes, we'll get this money back.
I see
And it'll be transferred right back to the fund that it came from.
that it came from.
Yeah. Just like you see this 128,641 going right back to SURF. Does anyone have any more questions on cash? The good thing is we're almost done. We're real close. Matter of fact, this page right here, now I pointed this out in other months too, but basically you're looking at it's like looking at the income statement again, but now you're looking at it by department. So you're seeing how the departments contribute to that bottom line. So if you see this 86,237, this is the month to date. If I went right back to the income statement, there's that 86,237 right here. Now, since we're into March, I might as well just, because this gives you the current month. This is showing you how each department's doing better, worse than budget. But if we go to the next page, it's the exact same layout, but now we're looking at it year to date. And the one department that I always do highlight, since it is our biggest revenue center, is the golf line item. So you'll see right here, total revenues for golf, $302,097. Last year, so when I say last year, I mean it, at the end of March of 2021 year to date, they had 281,352. So they took in about $20,745 more dollars this year than last year revenue wise. And by the way, Rich, that original number right here, or that number that we were talking about in the beginning, that 26,269 prepaid golf memberships. So that number is also a part of of this number right here. So it is in this revenue now at this point. And that's why you see that receivable at, or excuse me, that liability at 0 on the balance sheet.
Okay, cool.
Now, the total expenses for golf, so it's basically a couple numbers. It's this actual salary benefits number and this total other expenses number here. It's this one here. So those two added together come up to 195,307 total expenses for golf. Last year, they had about $177,050. So they did have $20,745 more revenue, but they also had $18,257 more in expenses. So it kind of offsets itself. Total net income for golf, 106,790 last year. The net income was 104,302. So they're pretty close to last year. And they're better than the budget by 42,255. Last year, they're better than the budget by about 39,034.
Question about maintenance. Is it again the 67,000 worse? Is that the tree expenses that come out of maintenance that makes that a higher number?
Actually, so the trees will be in ACC security. That hazardous tree GL fund will be in ACC security, and that's really what's driving this one. But now for maintenance, so Kim's talking about this 67,061 here. I mean, of course, I know off the top of my head, but just to get you better numbers. So basically, this is coming down to weather, and it's also coming down to other repair and maintenance. So now the good thing about these full statements, because you'll notice this is the 31-page version of it, but this maintenance amount, so remember that number, 67,061 over budget. If I scroll down to the departmental income statements, I'll just go right to the maintenance. Here's the maintenance departmental income statement here. So there's that 67,061 over budget. And on the maintenance actual individual income statement, you can see every single GL line item that makes up that number. And so basically we can see by scrolling through this, in terms of numbers that are over budget, there's that other repair and maintenance. It's because we don't have a budgeted amount for repair and maintenance. And also weather response. You'll see that weather response, which we have that rough, like January, February months, which cost a lot of money. And
Is
and
that
you see-
something we want to look at in the budgeting process this year to
oh,
put?
sure, yeah. Matter of fact, and that's a good point, because during the budgeting process, that's when we take a look back on like the prior year, and or even what's going on right now in the current year to see, gee, do we need to bump up some of these numbers more?
Yeah, because 0 budgeted and $70,000 spent to me says we need to put something in that column for 2023.
Yeah.
Yeah.
Right, yeah. But those basically are the two line items that really drive that over budget amount.
Okay, thank you.
Sure. And some of this too, once in a while, like even if we have a line item that wasn't budgeted for, if when we're actually entering things into the GL, sometimes we'll decide we want to capture numbers, have a better way to capture a certain group of numbers. And so we might create a GL or put it to a GL, even if it doesn't have an actual budget for it, we'll have a better kind of pot basically of certain expenses. And overall, like departmental wise, like the overall department still has their overall departmental budget. So even if, meaning like, so like the bottom line it'll still reflect that it's drawing down against like an annual budget of a department. Even if I created a new GL like this, let's say this, here's a good example, this IT support services. Let's just say for whatever reason, I really want to track how much we spend on, I don't know, like IT support tickets related to Android phones. I'll just make this up, then I could, for whatever reason, I need to do this, especially for some governmental reporting purpose or whatever, then I could create a GL 5126 IT support for Android phones, whatever. And then I could start to track certain expenses, but that would have a zero budget since it wasn't in the budget originally. But the two would kind of offset kind of against the 7,500, so to speak. I guess you could kind of think about it like that. So I guess what I mean is this annual budget and budget remaining. So you still do have the annual budget for that department. So this amount right here, even though it's 9,786.64 over budget in this case, it's still basically, it's still drawing down in a sense from this total budget of 548,260. So it'll still become a part of this over or under budget. If that, hopefully that didn't confuse things, but one good example, I'll tell you, like, let me just pull this back over here real quick. Okay, here's this fire. So we're looking at the UDR project. Now we're looking at the capital project report, UDR project report. Now we have this Firewise code that was approved by the board. But you see now when they approved the board, when this project was approved, it was approved for a total of 38,415. Now this is where I'm tracking. So I made two different codes, 9621 and 9621.02, because I want to separately track wages and benefits in this line item. And then over here, you'll see how these two, like basically this footnote, 9621 and 9621.02 are the same project, meaning these two are still drawing down on this original budgeted amount of 38,415. So it's kind of like, even though one particular GL line item might not have a budget, it's still drawing down on the total departmental spending plan budget for the year.
It looks like they're offsetting because we were over, at least for currently for the invoicing, over on the actual Firewise on 9621, but we're so far under in the 9621.02. So they offset one another.
Yeah, actually, this one is kind of like, it's read a little differently. So basically what you're looking at here is this is saying the accounting fund's obligated? This line item is saying, oh wait, we're obligated for a negative 5,536, which then is the key that, well, actually that line item is over budget, so to speak.
Right.
But then, yeah, so then this footnote is basically then saying, well, don't worry about that. These two are the part of the exact same.
Right.
Okay, that pulls from 38,415.
Combined amount that's
Yeah,
covering the overage in 9621.
right. I guess that's pretty much it for the financial statements.
Any other questions from the committee before we move on in to community questions? And Joel, I want to thank you for going through that. I'm very impressed with how knowledgeable you are of our accounts. I know each one is probably like a little baby to you, but you're very knowledgeable about all of them. So I want to thank you for your good work.
Yeah, thank you.
Keeping charge of our accounts. So if you could stop your screen share, and if John can join us, hearing no more questions from the committee, and allowing us to move to community questions.
Sure. And it looks like Gail has her hand raised. So I'm going to go ahead and bring Gail on over. Gail, I brought you to the meeting. You can go ahead and unmute.
Hi, Gail.
Hi, Gail. We can hear you. I think we can hear you.
I can't hear her.
I'm going to try to
mute her and unmute her.
Yeah. Well, that does, oh, there we go. I think you got yourself unmuted, Gail. Still can't hear her.
Maybe her mic isn't working.
Yeah, perhaps.
Perhaps, Gail, if you can email us your question at financecommittee@suttonvalley.com. If we can't get your sound to work, you still have that option to get your question in. If we can't get your sound going.
She could also put it in the chat.
Yeah, that's a good idea too, Dan.
Could do that. Gail, I'm going to go ahead and move you back to the attendees. Something else you could try is if you can quickly leave the meeting and then rejoin. Sometimes that clears up some of those technical issues. All right, we do have 7 people with us tonight. If anybody else wants to jump in.
Thank you all for attending, your community members. It's good to see folks engaging in our community finances. No more hands raised. Oh, there we are. So I see Willow says, is the Finance Committee going to review the SVCA purchase of Sunmark? To answer that question, Willow, no, that is a board decision. So that does not go to the Finance Committee. And Gil says that there is no business for finance. That tomorrow the board will discuss the acquisition of Sunmark. How many decisions have been made on this date? And to reiterate my answer to Willow, that is a board decision. So that will be discussed at tomorrow night's meeting, which starts at 6 p.m. I believe it's a 6 p.m. meeting.
6 p.m.
And everyone is welcome to attend that meeting, and your concerns about the agenda items for tomorrow can be addressed at tomorrow's meeting. And Gail, the role of the Finance Committee is in our bylaws. And I will direct you to our bylaws, section 4. And our bylaws outlines the role of the Finance Committee. Is there anyone else that would like to come to the meeting in the vocal form outside of the chat?
And I can bring you over just by using raise hand in Zoom. Should be located at the bottom of the screen if you're on a computer. Anne's got her hand raised. I'll go ahead and bring Anne on over here. There you go, Anne. You can unmute.
Hi, all. Ann Cope, 52 Louis View Drive. Let's remember that property owners are supposed to identify themselves. So could we have Willow please identify herself? And Gail, I mean, we know who Gail is, but it's still what we're supposed to do. Thank you.
Thanks for that reminder, and that makes sure that those that are asking questions are in our community.
All right. Thank you, Anne. Anybody else tonight?
All right, hearing no further comments or questions, I am looking for a motion to adjourn.
A motion to adjourn.
And do we have a second?
Seconded.
Thank you all. So this